Okay, Block 6, the Great Depression, Section 1, Crash and Calamity, the term starting the crash of 1929. In October of 1929, and by the early fall, by the end of September, the beginning of October, serious investors began to realize that the price of stock was too high, that the stocks were overvalued, that the companies were not worth what the stock price said that they were worth. So some cautious investors began to sell in early October of 1929, saying, look, that these stocks are overvalued. People continued buying, however. People who were not as, did not have the same level of expertise in the market, people who believed that the good times would last forever, bought up the stocks that people had sold, and prices continued to climb higher and higher and higher. On October the 28th, Black Monday, 1929, so much of how a stock market works is psychological. Once everyone starts believing that stocks are overvalued and wants to sell, it spreads like a virus. It spreads like a contagion. And that is what happened on Black Monday. All of a sudden, it became common knowledge that these stocks were overpriced and these stocks were overvalued, and a sell-off began. People ordered their brokers to sell stock at whatever the cost. And the price of stocks in the Dow Jones Industrial Average, which is an average of a bunch of big companies' stock values, began to plunge. More and more people called in and said, sell, 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 sell. Even if I lost money, the stocks are overvalued, sell, 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 sell. By the time the closing bell rang on Black Monday, the stock market had lost 13% of its value. And that would be the equivalent today of the stock market losing about 1,800 points in a single day. Keep in mind that today a sell-off of 200 is considered to be a really bad day on the market. A loss of 12% would be a sell-off of about 1,700 points. The next day, Black Tuesday, October 29th, the panic only worsened. 16 billion shares of stock were traded that day, all for lower and lower and lower prices. The market fell another 12%. So in a period of 2 days, the stock market lost a quarter of its entire value. And that would be the modern equivalent of the Dow Jones dropping 3,500 points in 2 days. It caused chaos on Wall Street. Investors who lost everything jumped out of windows to their deaths in lower Manhattan. I mean, consider that, if your family is depending on, you've lost everything, to go home to your wife and children and say, honey, our former upper middle class existence is now gone, was more than a lot of people could handle. So they jumped out of a window and killed themselves. That the market would slightly bounce back in the weeks to follow, but the economic disaster that the stock market crash presaged, that the stock market crash came before, was the warning bell, the opening bell, if you will, of the Great Depression. That it was a symbol that the good times of the 1920s were over, and that life was going to get a lot more difficult for the vast majority of Americans.